So it seems that many of you are having a lot of doubts with what different sort of orders are. So almost each and every single broker they have explained on how to use their order types. So, but I just thought I could just share a short videos on how to use the different orders that is existing in the market. So right now we are using Zerodha brokers platform. Now most of you, like most of the people use Zerodha, like considering the clean user interface and all. Okay, so I just thought I would just explain about it. So to start with, okay, this is the chart of Axis Bank that you're seeing. Okay, so currently we see that the price is at 458.1. Okay, now, so to buy a stock, so I'm just giving you some examples over here. So let's assume that I want to purchase the stock Axis Bank. So what to do? So right now you see that the price is 458. So what I see on the right hand side is the price of the stock. I realize that the current price is at 458. So what should I be doing? So let's see what to do. See the Axis Bank charters here once again. 457.95 is the current price. Now, let's say that whatever is the market price, okay. So if I look at this chart, if I kind of look at Axis Bank, I kind of realize that currently this stock is being traded. If I look at the chart, I realize it's traded for 458.2. Okay, it's kind of keeping on changing. We know that the price of stocks keeps on changing continuously throughout, depending on the bid and ask. Right now, let's say that I'm very much aggressive and I really want to buy this stock. Whatever is the price, I don't care. I want to buy it. So what should I do? I can click on buy. Now I'll be going for what we refer to as a market order. Okay, so category is regular. Now I'll be going for a market order. So as you can see in the case of market order, we are not mentioning any sort of a price. Okay, we are actually not at all mentioning any sort of a price. So buy at market order means whatever is the current market price. That is at the time I push the trade, at the time I press the button, at the time this price basically reaches the exchange, whatever is the current traded price in the market, my order will get filled at that particular instant, at that particular price. Okay. So I really don't bother about what price the product is being traded at. I just want to buy this. Okay, so I look at the screen. Okay, 458.4, 458.35. If I click a buy order, that order will be fulfilled. Now, intraday and long term. So, intraday is the order type or the classification that we use when we want to trade, when we want to buy and sell within the same day. Now, let's say that you want to take an overnight position. That is, you want to hold this position for the next day also. Today you want to buy, you want to maybe hold it for next day, maybe hold it for the next coming week, or let's say that you want to hold this for your lifetime. So that is when we take long term, so which basically refers to cash and carry, or for investments also the same thing, you can use long term, meaning you can hold the share for as much time as you want. Okay, now just realize that when you are actually purchasing for intraday, comparatively the charges are going to be lesser than how much stamp duty, etc., that you pay when it comes to long term. So intraday means you buy and sell within the same day. You are just trading. So long term meaning you are basically investing in it, or maybe you're taking a swing or a positional trade. Or in simple words, your time horizon for staying in the trade is more than one day. So if you do intraday, so by the end of the day, automatically your positions will be cleared off or squared off. Meaning at the end of the day, your net position will be zero. That is, if I buy one quantity, by the end of the day today, my net quantity will become zero once again. Okay, why? Because my positions will be squared off by the end of the day. That is before three. So this is Zerodha. So right now it is around 3:20 p.m. Okay, market closes at 3:30 p.m. So by 3:20, so at times when the volatilities and all are pretty much high, it gets squared off like 3:10, between 3:10 p.m. and 3:20 p.m. My positions will be cleared off by the end of the day. That is what we refer to as intraday. Now, so I realized that the price of the stock is just 458.45, right? Like 458.45 is the price of the stock in the National Stock Exchange. Now, when it comes to Bombay Stock Exchange, this is 458.2. So I will also be able to see, I'll in this option, like in Zerodha, like I can actually switch from which exchange I want to buy this. So that can also be done over here. Now we always talk that more people are trading on National Stock Exchange. Okay, because of the very high volume present in it, large number of people actively participate in National Stock Exchange as compared to Bombay Stock Exchange. So let's go with National Stock Exchange itself. Now for intraday, so when it comes to intraday, so today like whatever we are going to deal with is for intraday trading. So when it comes to intraday, we also realize that there is something called as margin requirement mentioned at the bottom, which refers to the amount of money I need in my account. Okay, the amount of money I actually need in my account to purchase one share. That is, if I want to purchase one quantity of Axis Bank, how much money do I need in my account? That is what is being referred by margin required. So I realized that for purchasing a stock whose price is almost 460 rupee, the margin money required is just 91. Okay, so I just need 91 rupees in my account to purchase a stock whose value is 460. Okay, or in a simple words, what I could say is for purchasing, okay, to purchase one unit share, I just need 91 rupees in my account. That is, I'm getting a leverage of almost 5 times. Okay, why? Because 9 into 5, okay, 450, right? 9 5s are 45. So I'm getting a leverage of almost 5 times, or I just need 91 rupees in my account to purchase a unit share. So let's have a look if I just place a buy order. So just understand that I'm just demonstrating the different orders. No, we are not looking at any strategy or something. This is just a demo. Okay, so one quantity over here, I'm just going to click a buy. So let's see that 458.8 is the price that I see over here, 458.55. So let's see what happens when I place the order. I'm clicking on buy, and whatever is the market price, the order is going to get filled. Buy. So 458.85, my, like, I have purchased the product at 458.85. Okay, now if I go to positions, I'll be able to see what is my present profit or loss. So right now we have used a regular order. Okay, so we have actually used a regular order on Axis Bank. Okay, that is regular order, meaning this one, I have entered the trade at the market price, and whatever is the market price, I got a fill over there. Like whatever was the market price at that particular instant, I purchased it there. Now let's quickly have a look what limit order is. Okay, so so one more thing I just wanted to mention to you is, so if you enter a trade using the market order, okay, now you would actually be having this question, okay, how do I exit the trade? So multiple options are there. So if you want to exit at the market price itself, you can just click on exit position. So whatever is the market, like whatever is the market price at that particular instant, I'll exit over there. Meaning I'll sell it off at the current market price, whatever is the market price. Now let's say that I don't want to exit at the market price. Okay. Now I bought it at, as you can see over here, the average is 458.85. I bought it at 458.85. Now I kind of need to exit off this trade only once the price reaches. So currently it is trading at 458.65. That means I'm in a loss, right? Now let's say I want to exit this trade only once the price reaches 458 point, let's say 85 itself. That is only once the price goes above 458.85, I need to exit my position. So what could I do? I could keep, if I want to exit at the market price, if I click on sell, now itself the order will get filled. So if I click on the limit order, so that is what we said, we are going to deal with limit orders next. 458.7, sorry, 458 point, let's go with 458.85. So if I click keep a limit order to sell at 458.85, so what this is going to do is, I will sell this stock only once the price is either 458.85 or if it goes above 458.85. So until and unless the price goes above 458.85, I won't be selling this. Just think this way. See, when you are a buyer, you always are willing to purchase something at a lower price. So something that costs 100, you won't be kind of going and telling, okay, I'll buy it for 101 or I'll buy it for 102. You will always be interested in purchasing the product. If it costs 100, you will always try to negotiate and buy it below 100. Similarly, if you're selling something, you already have something, you want to sell it. Okay. Uh, so you will always be interested in selling it off at a higher price, right? So when we are using a limit order, the same logic. So currently the price is at 458.75. Now, if I want to sell this off only once the price goes above 458.9, so I could actually keep a limit order to sell this stock at 458.9. That means only once the price goes above 458.9, I'll be selling it off. So until and unless the price doesn't go above 458.9, I won't be selling it. I'll be holding it. Understand? As long as the price stays below 458.9, I won't be selling this, but only if it is equal to or greater than, I'll be selling it off. So if I click on a sell order, okay, so this order will actually be pending till my price reaches, or till the stock reaches this price 458.9. My order will be pending in the pending in the exchange to get a fill. So yeah, so you can see that now it got filled. Okay, so that's such a coincidence. So right now we got a fill. Now the reason for that is the price has actually gone above that. So price went above 458.9. That is when we exited the trade. So kindly note, my friends, like right now I'm just demonstrating each and every order. So now definitely like this profit will be taken away because of the charges and all. Now, so kindly understand that just orders are being demonstrated. That's why like all single quantities, I'm not concerned about what charges I'll pay over here. So right now price has gone up to 459.2. So we sold it at 458.9. Okay, so just realize, so what limit order does is only once the price goes above a particular level or a particular price, only once the stock goes above a particular price, you'll be selling it. So that is why you use limit orders. Now let's look at one more example. Now let's say that I want to buy this stock. Currently the price is 459.2. Okay. So earlier example, we bought the stock at market price. That means like whatever was the market price existing at that point of time, we were ready to purchase it. That is why we used a market order. Okay, that is why we use a market order for purchasing it. Now let's think about a case you are interested in purchasing it only once the price falls below your desired level, or only once the price falls below the desired price you're looking for. So right now it is 459.9, right? So let's say that I'm interested in purchasing this only once the price falls below, let's say 458.5. That means I'm interested in purchasing the stock Axis Bank only once the price falls below 458.5. So what I'm going to do is I'm going to keep a limit order at 458.5. That means only once the price drops below 458.5, I will be purchasing it only once it drops below 458.5. So I'm clicking on buy. Okay, so you can see, okay, there's something like this over here. If I go to orders, I see that this is pending. So at 458.5 there is a pending order. So only once the price falls below 458.5. Okay, now once again I just gave you that example also earlier, right? So as a buyer, you are always, so when you're placing a limit order as a buyer, you are looking forward to purchase the product only once the price drops below this particular point. So if it is above this, you are not interested in purchasing. Only if the price is dropping below 458.5, that is when you are interested in purchasing it. So when I use a limit order, I am interested in purchasing the product. As a buyer, I am interested in purchasing it at a lower price. Now as a seller, you are interested in selling it off at a higher price. So just like we squared off our positions last time. So now let's see if the price falls below 458.5. It's just touch 458, maybe, yeah. So now I see that I have bought it at 458.5. Okay. So why? Because the price has actually come below 458.5. Then once the price came below 458.5, I purchased it. Got it. So once again, if I want to sell, so last time I kind of sold using a limit order, right? So when the price was trading at something like this. I sold it off at a higher price. Now this time let's think about exiting it at the market price. That is like whatever is the market price. Okay, so whatever is the market price, I would like to exit it off. I somehow want to exit it off. Okay, that is whatever is the price. I am not concerned. I just want to exit off or square off my positions. So that is the time when you use market orders, and that is the exact reason why we say market orders are being used by aggressive buyers and sellers who are the ones who is actually driving the price. It's the aggressive orders that drives the price of the stock. So here, if I place a market order, that means whatever is the price at that particular instant my order reaches the exchange, I'll be exiting it. Got it? So let's say that I'm selling it off right now at the market order result. So whatever is the market price being traded, I'll be exiting my position. Okay, so just clicking on sell. So I have sold it off at 458.45. Now what has happened is that my P&L is 0. That means like my average buy and average sell has been the same now. Okay, so whatever was the market price at that particular instant, my order got filled over there. Got it. So right now I had just shown you that is like how to use a buy in market order as well as in limit order. Both has been shown. So I have shown you like how to exit the positions. That is like once you buy, how to exit that. That also I have shown. Now just realize that if I want to buy something, let's say at market price, right? If I want to buy something at market price, I can just buy like this, as simple as this. Now, if I want to sell this, so earlier whatever I was showing you was on the positions itself, I was actually uh, selling it. Okay. Now, if I want to sell it over here, this also I can do. Like rather than going from my positions, I can actually sell it over here also. But make sure that everything is the same. Okay. Everything is the same means it should be intraday. It should be market order, like it should be regular market order also. Now, if I want to sell it, if it is market or limit, both you can do while selling. So on intraday itself, I should click on sell button. Done. Okay. So my net position is once again 0. My P and L is negative 0.1 rupee. Okay. So that way also I could do. Then one more advantage of using this regular order, I'll tell you one more advantage. Just have a look at it. So let's say that I'm purchasing two quantity. Okay, I'm purchasing two quantity. Now, when I'm purchasing two quantity, market order itself I'll show you. I'm purchasing two quantities in market order. I'm being aggressive. Whatever is the price, I just want to exit. I want to enter, being a buy. Now let's assume that I kind of need to sell only one position. So many of you have this doubt. Many people usually have this doubt. Okay, I'm buying something. So, okay, price has given me some sort of a move. Some sort of a move has been given. But I don't want to exit all my positions. I just need to exit half of my positions. How could I do that? That is, if I want to exit just half of my positions, how could I do that? So, for that, you could just click on, in this itself, you could just click on one quantity, click on sell. So, what is going to happen is one quantity is going to get exited. So whatever quantity is whatever quantity is actually remaining over here is still there. Only one quantity of your positions has been exited. If I want to exit the other quantity too, I could click on sell. And that's it. Net quantity has become 0. Just realize that if you want to do some partial profit booking and all, like using regular orders would be kind of pretty much comfortable. Okay, I personally use more of regular orders. Now, one more thing, I always use a stop loss. Now, this is just for a demo, like in the sense, it's not just one quantity is being traded and just shown for a demo. Now, I'll just show you like on the sell side how to do the very same activities on the sell side. That is what we are going to see next. So, right now we were talking about the market orders and limit orders. Okay. Now, I just told you that I'll show you how to keep a stop loss. So, when it comes to a regular order, how you could probably be keeping a stop loss. That is what we are actually going to talk about next. Now, stop loss is nothing else. but an order that we actually use to protect ourselves from losses, right? Not from losses, like from extreme losses that is actually going to go outside our control. That is the reason why we are going to use a stop loss order. So market order, as you can, I personally feel you are pretty much understanding it now. So whatever is the market price right now, you're looking forward to enter it. Now, when it comes to a limit order, you are actually, as a buyer, you'll be willing to purchase it at a lower value. So if it is 459, if it is 459 right now, right? One more example I'll give you. Let's say that I'm keeping a limit order for 460. So limit order as a buyer for 460. So right now the price is 458.95, right? So obviously I'll be purchasing it because the price is lower than 460. So probably you would be having that doubt also. I purchased it at 458 point. Sorry, let me see over here. I purchased it at 458.95. Okay. Uh, because I placed a order, I kind of placed a buy order so for some 460 or something. So I hope you get that. So now I have purchased it. Now let's say that how to keep a stop loss. I purchased it for 458.95. So when I'm purchasing something for 458.95, so right now the price has actually picked up. Price is actually picking up. Okay. Now let's kind of say that I understand. So since I purchased it at 458.95, let's kind of take an example where I understand that my view goes wrong once the price falls below 458.5. That is, I have entered somewhere here 458.95 something here. Now let's say that I understand my view goes wrong once the price falls below 458.5. Or I'm keeping my stop loss over here to protect myself from the losses. Why? Because if the price drops down below this point, then I understand my view goes wrong. So this is the next, like this is the like this is my perspective. If the price falls down below this point, then I understand my view goes wrong. So what should I be doing? 458.5, I should be keeping my stop loss, right? So what I'm kind of going to do is I'm clicking on either over here exit. So since I bought it, now when I click on exit, the sell side is coming. So either over here I could do, or there is another option here also I could do. So understand that I should be clicking on stop loss market. So let's say that I'm keeping a stop loss at 458.5, right? Like as we mentioned earlier, I guess it's 458.5. So the price drops below 458.5. I should be clearing my positions. I should be exiting it, because if the price drops below this point, I should understand my view has gone wrong. So I'll keep a stop loss market order. Okay, I'll keep a stop loss market order at 458.5. So which basically does nothing else but, if the price falls below 458.5, I will be exiting the trade. So I see that my order is yeah, I didn't, just a second, I didn't place it. Okay. This is not showing in pending orders. Okay, just a second. So 458.5, I should keep a stop loss. So I'm keeping a stop loss market order at 458.5. So that is, if the price drops below 458.5, I should be exiting off my positions. I should understand, okay, my view has gone, I should be exiting my position. So I see that there is a pending order. Okay, 458.5, I'm keeping a stop loss there. So kindly note, when you're keeping a stop loss, if you bought one quantity, obviously you should be keeping a stop loss for one quantity itself. Okay, if you buy one quantity, don't think you should keep a stop loss for two quantity. You bought one, you keep a stop loss for one itself. So you can see that I have a pending stop loss over here. Why? Because if the price drops down below this point, I understand my view goes wrong and I need to exit off my positions. That is the reason I kept my stop loss over here at 458.5. I hope you understand this. Now, since it seems the price will take some time to fall down, what I'm going to do is I'm going to shift up my stop loss. Now, realize that you can always modify your stop loss. So, any person, he would be able to modify his stop loss and all after he entered the trade also. Now I have a stop loss order over here at 458.5. Currently the price is at 459.5. Right. Now let's say that I want to keep my stop loss at 459. I want to keep it at 459.4 or 459.3. That also I can do over here. I can modify it anytime. So if I keep it at 459.4, easily it'll be triggered. I'll keep it as anyways. So this is just for demonstration. So 459.4 itself I'll keep. Now you see that my stop loss is being hit. Okay. So right now it is trading at 459.4 itself, right? 459.3. That is lower than my stop loss. That is why that order got cancelled now. Once it goes, okay. If it goes above 459.4, then I'll place. Then I'll do something. I'll keep it at 459.2. So I'll be able to keep. Oh, it has come down. Price has come down again. Now, okay, I'll just show it to you with 459.1 now. Then okay. Modify it, keep it. So just understand here whatever we're doing is just to understand the order types. Okay. So this is not a right way to trade. In the sense here, obviously I'm paying more as charges. Okay, I'll be paying more as charges even if I'm profitable in a trade. I'll keep it at 459.1. So I kept a stop loss. Okay. Now 459.1 is my stop loss. Current price is 459.2. As soon as the price touches 459.1, my stop loss will be hit and my positions will come down to 0. Okay, let's see that. Let's kind of wait for that to happen. As soon as the price touches 459.1, my orders will be now it's exited. So once the price reached 459.1, I kind of exited my positions. My stop loss got hit at the market price. My positions got exited and I'm out of the trade. So that is what I kind of see over here. Okay. So I hope you kind of get a sense of understanding how to keep a stop loss also. That is, you buy something, then next what you're kind of doing is you definitely have to keep a stop loss for it. Now just realize for yourself, if you buy something and let's say that I bought right now, I bought it at 459.2. Okay. Now I need to keep a stop loss for this from anywhere I can keep, from either here, from my positions, or from here, wherever you want, you could keep your stop loss. Let's say I keep a stop loss over here, 459.2. I purchase it. Right now the price is 459.459. Now let's say initially I keep the stop loss order at some 458.9. Initially I have kept a stop loss order at 458.9. Okay, so that order will actually be pending over here. But let's say that after a while I feel that okay, this is a stop loss order that I have placed. Now let's say that the price has now approached my target. Now I need to exit the trade, booking my profit. I don't want to modify my stop loss. Rather, I need to exit the trade by booking some profit. So right now the price is 459.4. So let's say that I want to exit the trade at my target of maybe 459.4 or 459.45. Then what I could do is, earlier it was a stop loss market order. Now I can even convert it to a limit order. I can also convert it to a market order also. So market order meaning whatever is the market price, I'll be exiting it there. If I use a limit order, as a seller, you are interested in selling it off at a higher price, right? So I'm keeping a limit sell order for, let's say, 459.65. So greater than or equal to 459.65, I'll be happy to sell it off. Okay, so I just see that. Now what happens? So once the price has reached your target, you could kind of think about doing this. Like you kind of keep a limit order to exit off your position. 459.5 I'll do. Kept a sell order over there. Now it is pending. So in positions you can see, okay, right now I have some P by L 0.15, but it's still pending. So the price just goes above 459.5. Right now, like my order must be in queue. If it just goes above 459.5, I would be exiting all my positions. Now you can see, yeah, it's done. So I have some small profits over here. But kindly note, I'll be paying more charges. So these trades, pure demonstration. Now I showed you like how I converted a stop loss order, which was earlier a stop loss order, how I converted it to a limit order to book my profit. So that can also be done. So, so once again, we look at the chart of Axis Bank. Okay. So when I see over here, now the next thing. So we were talking about limit orders, we were talking about market orders and all for entering. Many of us have this doubt, like how do you short sell? So it's very simple, just like you buy. Okay. So when you sell something, like you have a view that the price is going to fall down. Obviously, if the price is going to move up, then definitely don't sell. So let's say that when you are short selling something, your perspective is that the price is going to fall down, and once the price falls down, you want to buy it back, right? So now I don't have any holdings of Axis Bank, or nor do I have any positions in Axis Bank. So all I want to do is I want to sell some shares of Axis Bank, and I kind of want to buy it back once the price has actually dropped down. Okay, so I'll just take out the chart once again. So this is the chart of Axis Bank. I just want to sell it off. Let's say I want to sell it off using a limit order 459. Okay, then once the price drops to now, I want to buy it back. Let's see this. I sell Axis Bank. I have placed a limit order to sell it off. So here itself, now Zerodha is kind of providing an option to modify and all. No, it's not working properly, I guess. There's a drop. Okay, I'll just. If you want to modify wherever you want, you can modify. Now it is 458.8, right? Okay, let's keep it 459 itself. No change on that. So I'm selling this. I have kept a limit order to sell. I guess it's filled. Oh, no, it's not filled yet. Yeah, it's still pending. So 459, I'm looking forward to sell it. Still order is still pending. You can see one quantity. Okay. Okay. Now I have sold it at 459. Now let's say that I have sold it. So when I sell it, definitely net quantity shown over here is -1. Okay. Now 459 I sold it. I want to buy it at a lower price, right? Obviously, if you sell something, you want to buy it at a lower price. Now let's say that I want to buy it back at 458.7. I can keep a buy order at 458.7. So I sold at 458.9. I want to buy it back at 458.7. So I'm just keeping a buy order for the very same at 458.7. So understand this is sell over here. I should be buying it back. So buy means blue color. 458.7, I need to buy it back. So I'm keeping a buy order now. So whatever I am sold, I want to buy it back once the price drops further. Okay. So here just a second. So here also logically every single trade that you take, you should be keeping a stop loss to protect your risk. Okay. So here I have bought back. I have kept a target order to buy at this price. Now let's say that I understand, okay, this is not a good risk reward ratio setup or something. Like let's say I understand my view goes wrong if the price picks up above this point. That means I should keep a stop loss at maybe 460. Okay, I should be keeping a stop loss at 460. So I will also keep a limit order. I'll keep a stop loss market order at 460 to buy it back. Meaning, if my view goes wrong, I will get out of the trade. Okay, if the price picks up above this point, maybe my view goes wrong. So I'll buy back the shares and I'll exit out of the trade once my view goes wrong. Or once my target is hit, I'll be exiting the trade. So understand, keep in note, very, very important. So if I'm doing this, once my target is getting hit, right? Once my target is getting hit, this order I'll be having to cancel or clear this order by myself. I will actually have to square off this order by myself. So, okay, my target has been hit. So that is why this order, so 458.7, I have bought it back. Now all I have is the other stop loss order kept at 460. So I need to cancel this. So I can cancel this order now. So yeah, that trade I have made a profit. I cancel my stop loss order also. Right. So else what is going to happen is if you don't cancel that order, now let's say that after some time, maybe after 1 hour or 2 hours, maybe you must have even went for your lunch, or maybe you must have even left your desktop. But then if the stop loss is getting hit, that means you're taking a new position. So don't ever make that mistake. So if you are using regular order and you're keeping separate orders for your target and stop loss, make sure that once your target is hit, you cancel the other order. Or if your stop loss is hit, cancel the target order. Okay, whatever pending order you have, make sure that you cancel it off. Got it. Now, so that we have seen. Now let's see what is uh, we have seen about regular order. Okay. Now let's kind of see what is cover order. So when I use a cover order, the only difference is that cover orders by default or will have built-in stop loss. That means let's say I'm buying something over here. Okay, so let's kind of say that I'm buying this share over here. Okay, if I'm buying this particular stock over here, and if I want to keep a built-in stop loss, or meaning like if I want to set a defined stop loss, that is like if I want to exit my position. Let's say that if the price drops below this point, I'm looking forward to buy, right? I want to exit or square off my position if the price drops down below 458.59. So what I'm going to do is, if I want to buy, I'll keep a market order. I'll keep a market order for buy side, and I'll keep my stop loss. So if you're buying something, obviously you are buying something with a view that the price is going to move up. So the price moves up, you make money. If the price falls down, you lose money, right? If the price moves up, you make money. If the price falls down, you lose money. So if the price is falling down, you lose money. You have to keep a stop loss for it. So just show you over here. So let's say that I'm keeping a market order to buy when the price is falling, and let's say that I keep my stop loss at 458.5. 458.5, I'll keep my stop loss. I'm buying it at the market price. So right now 458.75. So here I'm keeping a stop loss because if the price falls down this, maybe I understand my view goes on. I'm buying it here. So I have bought it. So I have one quantity Axis Bank. Now you see that one pending sell order is there for my stop loss. Okay. So if the price reaches this particular 458.5, my stop loss will be triggered and my net quantity will become 0. Okay, that is my positions will become 0, net quantity will become 0, and the loss that I make over there will also be booked. That will also be seen. Now you probably would be having this doubt. Then what if my target is reached? What if the price is picking up as per our view? That is, over here what we have done is we have bought this expecting the price to move up. Just a random example, we have kept our stop loss somewhere here. Now what if the price is moving according to our view and we want to book our profits? Two things can be done. So every time there is a considerable upside move, you can modify your stop loss and bring it up. So initially your stop loss is at 458.5. So we kind of bought this at 458.85, right? So every time there is a considerable upside move, you can bring up your stop loss. You can maybe bring up. So right now it is trading at 459.25. So you can look at the levels on the chart. You can considerably increase your stop loss. Maybe I can actually bring it to 458.995. So I could do that. So my stop loss is brought up. Now one more thing I could do is, if I don't want to do that, I want to exit the position. So whatever price it is, I want to exit my positions. I could just click on this. Okay, I could just click on this open order. I can just cancel it off over here. Whatever is the market price, my order will get filled over there. Whatever is the market price at that particular point, my order will actually get filled over there if I exit or if I cancel off my order. Okay, so if I cancel off my order, whatever is the market price, I'll actually be exiting it off over there. Now kindly note, the disadvantage of cover order is that one disadvantage that we could say, or the only disadvantage we could say, is that cover order, when we reach our target, that is when we reach our target, we'll be having to exit off at the market price. That means whatever is the market price, you'll be having to exit off over there. That means like if you're trading very large quantities, if you're kind of trading very high quantities, very large quantities and all you are trading, so exiting off all the positions at market price becomes a difficulty. Why? Because maybe you see that 459 is the price on the chart, but when you click on exit, maybe you'll get a fill at 458.9 or 458.8. The fluctuations will be there when you're trading very large quantity. Exiting off at the market price is going to become difficult. Then one more thing is like when you're using regular orders, just like we did earlier, if you're trading 10 quantities, maybe at some time you want to book 5 quantities. That means you want to exit 5 quantities at that price. That can be done. Then the rest 5 quantities you could exit sometime later. Maybe you can exit 5 quantities first, then 3 quantities, then 2 quantities. All these things can be done when it comes to regular order. But cover order, how many quantities you are entering, the same number of orders, same number of quantities you should be exiting also at that same time. So that is also one more disadvantage of cover orders. Now one more thing to be noted is this is very important. So let's say that I entered the trade using cover order. I bought one quantity. Just give you an example. So let's say I'm buying something using cover order, keeping my stop loss at 458. So these are some mistakes people do. Okay, I bought something at 459.2, keeping my stop loss at 458. Now I bought it over here. Now they think, okay, I'll sell one quantity over here, and that's it. If I sell it over here, then my net quantity becomes 0. Just realize for yourself, both are two different products. So one is cover order, other is MIS. So both of them will actually stand as two different separate products. Okay. So if you are entering a cover order, that cover order itself will be having to exit. So what you entered using cover order, you have to exit it by yourself. Understood? So this MIS order is something completely different, or regular order is a different product itself. So if you enter using cover order, don't think you'll be able to exit using the regular order. So whatever is entered using cover order, from the positions itself, you'll be having to click on exit, or from the orders you should go and you should cancel the stop loss order. That will actually lead to filling the order at the market price, and you'll be exiting it. This is one very common mistake that people do. Now I'll show you the other one. So cover order you have seen. So cover order can be entered both ways. That is, at the market price you can enter. So cover order is nothing else. Cover order is an order that comes with a stop loss. So this trigger price is kept at the stop loss. So cover order, when it comes to cover order, you can enter it at the market price. Also, you can enter it using a limit order. That is, right now the price is 459.1. I need to keep my stop loss at, let's say, 458. Okay, so if I use a market order, whatever is the current price, I'll be entering the trade. My stop loss will be kept at 458. Now let's say that I want to enter this trade only once the price is lower than 459. Now 459.1. So I can keep a limit order for buy. So only once the price comes below 459, I'll be entering the trade. Till then, the order is going to be pending. And once, okay, obviously after this only my stop loss will be there. So my order is pending right now. Okay. So that is what a limit order does in the case of cover order also. So just cancel this. Now I hope you understand that. Now the next thing that we are going to do is we're just going to show you on the sell side. So far we were doing on the buy side, right? So on the sell side also, okay, if you're selling something, your view is price is going to fall down, right? Your views are price is going to fall down. So you make money if the price falls down, you lose money if the price picks up. So obviously if I'm selling something at 459.1, which is the current market price, or 459.4, which is the current market price, just say that I keep a stop loss at 460. That is, I understand my view goes wrong if the price picks up above 460. Okay. So this understanding the view going wrong if the price picks up are all based on levels. So right now I'm just telling all these things just for demonstration of the orders. Let's say I understand my view goes wrong once the price picks up above 460. So I'll keep a sell order. Okay, so this should be sell side, not buy. Sell order I'll keep with the trigger at 460. I'll sell it at the market price. Automatically my stop loss will be at 460. Okay. So just show you at the market. If I want to use limit, that also can be done. So right now 459.4 is the price. So let's say that I want to sell this only once the price is above 459.5. So I keep a limit order for sell at 459.5 with my stop loss at 460. So my order will be pending till the price reaches 459.5. So once that is reached, I'll be selling it. Then my stop loss is kept at 460. Okay, that means if the price after selling it, if the price goes to 460, I'll book my loss and exit my positions. Let's take another example. I'll keep it at, let's say, 459.4. Okay, I'll keep it at 459.4, or I'll keep it at 459.3 itself. So you see that I have sold it, right? 459.3, I have sold it. Now the current price is 459.3 itself. My stop loss is pending at 460. So either I wait for my stop loss to get hit, or let's say that the price has given me a downside move and I'm in some good profit. Then what I can do is I can exit at the market price. So that is the limitation, as I mentioned. You will be having to exit off your trades in the market price when you are actually using a cover order. So we have seen cover order both sell side and buy side now. Now we have something else. Okay, not yes bank. We have something else called as the bracket order. So what does a bracket order do? Okay, so bracket order is just a bit more advanced version of a cover order. So where we have both our stop loss as well as target, meaning you are mentioning both your stop loss as well as target when it comes to a cover order. Sorry, bracket order. So let's say that right now the price of Axis Bank is 459.15. So let's say that I want to buy Axis Bank at limit price 459.2. That is my limit. So limit is there 459.2. I want to buy this. Only once the price goes, only once the price is below 459.2, I'll be buying this. Now, right now 459.15, right? So if I keep 459.2 right now, it'll get filled because right now the price is 459.1. So let's say that I want to keep a limit order at 459. That is only once the price falls below 459, I'll be buying it. Okay. So 459 limit I'm keeping. So let's say that I want to keep a stop loss of 1 rupee and I want to keep a target of 2 rupee. So I could do this. So meaning, if the price is below 459, I'll be entering the trade with my stop loss at 1 rupee, right? Stop loss will be at 458, target will be at 461. So if I want to do that, I can do that. If I want to keep target 1 rupee, stop loss 50 paise, that can also be done. Target 1 rupee, stop loss 50 paise. So this can also be done. You can click on buy. So automatically, okay, this order will get passed through. But just realize for yourself, right now bracket orders are not permitted because of the volatility that is existing in the market. Okay, but when it comes to Alice Blue, upstox also sometimes allows bracket order these days. When it comes to crude oil, Alice Blue permits bracket orders. Now Zerodha is not permitting it due to the high volatility. Okay, now this is usually permitted when the volatility is less, but these days you know how the markets are behaving. Due to the very same reason, we don't have permission to use bracket order. Now what trailing stop loss actually does is every significant upside move. Okay, so let's say that every time the price gives a move, you want to trail. Okay, let's show in the case of crude. So in the case of crude oil and all, usually like once the price actually gives, so crude oil and all, they have disabled this thing completely, that uh, trailing bracket order they have completely disabled. Okay, so in the case of crude oil and all, every time the price gives a good move, it keeps on traveling in the same direction for some good time. Okay, so due to the very same reason, it is important that we trail, meaning like once the price has, let's say, okay, I'll give you an example. We have bought at 458. Now the price goes to 450. Let's say price has reached 461. Okay, so that is your target is reached. So you book your profits and automatically the other order will get cancelled. So I have some recorded video of using bracket order, some live trading videos there. I'll be attaching the link of that video also below. So just have a look at that. That was a time when bracket orders were allowed. So in different brokers, different names will be there. In upstox, bracket order is called OCO, or one cancels the other. Meaning like once the target is reached, automatically your stop loss order will be cancelled. Or once your stop loss order is hit, automatically your target order is cancelled. So earlier in the case of regular order, I told you, right, we should be manually cancelling the other order. That is, if your stop loss is hit, cancel your target order. If your target is hit, cancel your stop loss order. Now in the case of bracket order, once your target is hit, automatically your stop loss will be cancelled, or once your stop loss is hit, automatically your target order will be cancelled. So what trailing stop losses does is, like let's say that I'm keeping a very big target, let's say 5 rupee. Now let's talk about a case of price from 458. Initially it moves up to 462. Okay, our target is at 463. Right, 463 is our target. It moves up to 462. Then from there it comes down to 457 and hits our stop loss. So we could have booked some really good profits over there, but because our our target was a bit big, we didn't book profit. Now let's say that we are keeping a trailing stop loss of, let's say, 2 rupee, meaning every time the price gives a move of 2 rupee, that is, let's say from 458 the price moves to from 458 the price moves to 460. So what will happen is my stop loss will also get shifted by 2 rupees up automatically, even if I'm not in front of the screen. But I personally don't recommend using this, or I personally don't use this also. So rather what I do is I manually trail my stop losses. So every time there is a significant move, every time there is a considerable move, since I'm in front of the screen always, so what I do is, like, I manually modify my stop loss. I trail my stop loss manually. So I have shown you like how you could modify your stop loss, right? So you could do that. So that would be a better option rather than using a trailing stop loss. So in the case of crude and all, yeah, Alice Blue is permitting it, but upstock sometimes they permit it. But this is not something that we can depend upon, and that is the reason I'm not using it. So right now it's mostly regular order itself that I use. So always for entering I use a limit order. Now after taking an entry I keep a stop loss. I keep a stop loss after taking an entry, and this is what I'm personally doing right now. Now some of you must get pretty much comfortable with cover orders, while some of you would actually be getting comfortable with which is regular orders itself. Yeah, the margin requirement for regular orders would be comparatively a bit more higher, but I personally find good about this is like you could do partial profit booking. Okay, you could, let's say you're trading some 2000 quantity. If you want 1000 quantities, you can book at a price, then the rest 500 at a different price. All these things, adjustments can be done when it comes to regular order, which is not possible in cover order. Got it? Yes. Now, stop loss market order also I have mentioned. That is, if you kind of want to keep a stop loss, as the name suggests, stop loss market order. That is, you enter a trade, then you want to keep a stop loss. Okay, that is, once the price drops down to this particular point, you want to square off. I'll just give you one more example. So Axis Bank. Okay, so this cover order will change. So Axis Bank, I want to buy this market price. I bought it. Okay, so I bought Axis Bank at 460.55. Now I need to keep a stop loss for this at 460. That is, so in the case of stop loss orders or SLM orders, so what is trigger price? Okay, what is basically this trigger price basically stands for is only once the price touches this trigger. So just like the trigger in the gun. Okay, only once the price touches the trigger, the order will get fired to the exchange. Okay, so as soon as the price touches 460, the order will be fired at the market price. That is why stop loss market. Okay, now the reason why stop loss market order, because if the order is getting fired at 460, of course, since it is a market order, the order will definitely be getting a fill. So there is no chance that the order will not get a fill. 100% since this is a market order, the order will actually get a fill. Now there is something else called as SL that you use along with trigger price. Now what this SL does is, so let's say that you want to sell one, okay, you want to push the order at the market. So if it is SLM, you are actually pushing the order at the market price, right? You are actually pushing the order at the market price. So as soon as the price touches the 460 level, the order will be fired at the market price. Now, if I'm using an SL order, what is happening is this is nothing else but this is going to be once the price touches 460. Okay, so this will basically just convert to something like a limit order. Okay, that is if I'm keeping a sell order with trigger price at 460 and my price, let's say 459. Okay, so what is going to happen is the price once it touches 460. Okay, once the price touches 460, this order will actually convert to a sell order at limit price. Okay, so this order will actually convert to a sell order at limit price. So after the price touches 460, the order will be converted to a limit order at 459. That is, I'll be selling this off only once the price is above 459, and first it should touch 460, of course, that is, it should touch the trigger, and the price is above 459. Only then my order will be executed. Let's say that after touching 460, all of a sudden the price drops down to 458. Okay, just an example. Then your order won't be getting a fill because limit was 459 for sell. Only once the price is above 459, you will be selling it then. Now maybe after touching 460, let's say that the next instant the price is moving to 460.5, then you probably would be selling it at 460.5 also. So same case, in the case of stop loss market also, as soon as the price touches the trigger, whatever is the market price, there your order will get a fill. Okay, so I hope you get that. Now if I want, just modify this. So I realize that currently the price is 460.35. So let's keep a trigger at 460.25. Okay, and I'll keep a limit as 460. So what is going to happen is, okay, so already at the trigger, that's why I should go to 460.3, then I'll keep. Okay, it's coming down. I keep my trigger at 460 with my this thing at 459.7. So if the price touches 460, my order will get fired. Okay, it got fired. Okay, my order got fired as soon as the price touched 460. Okay, so that is what we see over here, and it'll actually, I forgot what price we kept. So it'll get an execution only once the order is getting fired and the price was actually above 459.75. Okay, so I guess that was what we did there. So I hope you get that part also, but just realize so when you're keeping a stop loss, okay, always use a SLM. So if you're using a regular order to keep a stop loss, always use a SLM, because why do we need a preferred price when we are keeping a stop loss? See, we are using a stop loss to exit out our positions once our view has gone wrong, right? So now what is going to happen is, so let's say that you have sold something, you have kept a trigger price at 460, because the price falls below 460, you understand you goes wrong. Now let's say that you keep a price of 459, that is, you are willing to sell it only once the price is above 459. Now what if all of a sudden the price jumps to 458 and it keeps on falling? Then you won't be able to sell off. Even though your view has gone wrong, you'll be holding on to the positions and be incurring more and more loss. So always use a stop loss market order. Don't go for SL. So this would be what is going to be suggested when it comes to keeping a stop loss. So so basically these are the orders. Now these are the orders that anybody can actually use when it comes to taking a trade. So is majorly like regular orders itself that I personally use. Now some of you must find a comfort in cover order, and if that is the case, you could use. Now Alice Blue, sometimes they also don't allow bracket orders, but sometimes they like most of the times these days they kind of allow bracket orders, and it can be used. So so these are the basic order types that we should be doing for intraday. So thank you all. I hope you have got some takeaways from this video.